Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, daily chart of the ES, and the bulls are in the process of maybe putting together more than just a multi-day bounce here. What we're seeing this morning is, despite some bad news out of Germany, we saw it close above the 50-day exponential moving average, which is important. What's more important is whether or not we can close above the middle band. We are trading above the middle band now currently, but I have to reserve judgment until we see what happens with the entirety of the day. At this point, after trading above it as high as 49, a failure to close above it would leave a fairly ugly topping candle, more likely than not, on the daily chart. So if you're a bull, what you want to do is you want to go ahead and you want to keep this beginnings of a decent looking hammer, and you want to move over the middle band, close above the middle band, and what that does is it instills all those fears in the bears that are always there, that have been there for the last couple of years, that they make a low, the bulls start to come back, then they come back a little more, then they come back a little more, and then the bears lose control of the tape. If the bulls are able to put together a big day today, I see very little to stop a retest of highs. Okay, a close above middle band today will force even some longer term type bears that are trying to come in and say, okay, I'll go ahead and try another longer term short here around the middle band because this is a nice place for a bounce to exhaust. Even some of them are going to say, you know what, I'm not going down this road again. I'll take it off, I'll wait, and we'll see what happens up at 85. If that happens, then what you want to do is you want to instantly get out of sell rallies mode if you aren't already out of sell rallies mode, and you want to be back to the typical buy the dip mode. The general rule that I follow is if the market wants to trade below middle band, it's a sell rallies market. If the market wants to trade above middle band, then it's a buy the dips market. That, more often than not, is a rule that will keep you on the right side of the trade many, many more times than it won't. So the bears have really shown nothing since 1890. They have let the bulls pretty much do 60 handles straight up without a significant pullback. Does that mean we're going to pull back today? No. In May we did 12 days in a row without a significant pullback. So don't get into the habit of counting days and counting handles and saying, well, we're X number of handles off the low, something has to give, or we're X number of handles or X number of days off the low, something has to give. That's not necessarily true. What you need to look for right now, what's important is you had 2 days of the 50-day exponential moving average as resistance. It broke through and closed yesterday. It closed underneath the middle band, and now it's trying to close above the middle band. So it's very likely that whoever has a big day today is going to be the side that controls this, this next portion of the tape. So today's action is really the difference between the end of another sellable bounce, in which case the bulls will fail here up at the middle band and we'll start to see a pushback below, or the bulls get through the last major area of resistance and start to look like the bulls of old with clear sailing up to the highs. Okay, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.